This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 studios here in Mumbai. And I have to say that this is that time of the year when the financial capital, that is Mumbai, the city of Mumbai, completely transforms. The energy is unmissable. Before I sort of toss it over to my colleagues, here's wishing everyone a very, very happy Ganesh Chaturthi. Morning, guys.
Hi, good morning, Prashant. Morning, Nigel. And you know, it is, we kickstart the season of festivals, right?
Yeah.
And this is personally one of my favorite festivals, purely because of the kind of vibe that you have in Mumbai. There's so much celebration, everyone comes together. And the festival of Ganpati, right? I mean, as they call the Lord, Vignaharta, right? Remover of all obstacles. Yeah. And that's pretty much what you want to do in your life, perhaps, you know, go through it without any obstacles. So I love celebrating this festival. I'm looking forward to all the festivities.
Absolutely. You know, and tomorrow we have the entire day, so we'll be visiting, you know, all friends and loved ones as well. And, you know, paying our respects as well. But guys, what about yesterday? I mean, did you all see the Asia Cup? Mohammad Siraj, what a spell. I mean, I've never seen something like that. Bending his back, taking 4 wickets in an over. I think there was some doubts about this team, right? And maybe the opponents weren't that great. But I think we are getting into that groove ahead of the World Cup. And I'm backing this team, you know. Give or take anything, this team is going to perform in this World Cup. And I'm counting on them bringing the cup back home. I mean, it's at home. But, yeah, I love that performance. What a performance.
And it was, I think, the 8th Asia Cup that India
No, I'm not sure about that, but I know there were 6 wickets.
Book your tickets, Nigel. I mean, I'm told that, you know, Book My Show apparently had some tickets and they're all sold out. And I'm not, but yeah, I mean, you know.
For the time being, we celebrate the Asia Cup. I mean, and the batsmen came in there and they said, we want to nail this. We have knocked them out for 50 runs. Let's finish the 51st run, you know, in quick time. So, excellent sporting day for India yesterday.
No, absolutely. And, you know, so on that positive note, on that upbeat note, let's kickstart our coverage of the markets as we begin another trading session. You know, another trading week, actually, with a holiday in between. So you got, you know, last week, which was pretty good, right? Except last Tuesday. Remember last Tuesday? The market had sold off 3.5–4%. But after that, Wednesday, Thursday and Friday, the market spent in a fair bit of repair. The Nifty, Bank Nifty ended up between 1.6 and 2% higher. Mid and small caps ended flat. You know, Tuesday looked like such a large down day, but well, guess what? By the end, the small cap index was down 0.5%, the mid cap index was down 0.25%, Friday to Friday. So the point is, I mean, you know, over the next 3 sessions, subsequently after Tuesday, things have looked good, especially for the broader market. Actually, for the Nifty, I'm not very sure because it's been showing signs of loss of momentum. It's not been, I mean, you know, we're kind of ending for the last 2 days, Thursday and Friday, in the middle of the trading range, intraday range. I'll get back to that in just a bit. Global cues are a little mixed. So Friday, you got the Nasdaq, which was down 1.5%. You also had the S&P, which was down about 1.25% or so. The other problem, oil, which continues to be stubbornly high. It's not kind of seeing another big leg, at least not lately, but it's at 94, almost at 94, right? The US 10-year is now closer to 4.5%. There are many theories out there. One says that in all cycles, what happens is that the yield, the market rate, market interest rate eventually gets to where the Fed funds rate is. I mean, if that is true, then the 10-year has got another 50 basis points ought to go. Let's hope that does not happen, but that's where we are at. The dollar index is at about a little over 105. So again, I mean, it's a trioca of problems which the market has very neatly and cleanly ignored so far. But for how long is the question? Now, this week, we also have the Fed meeting, which we'll get the decision on Wednesday. And then Thursday morning, we will react to it. Expect the Fed to leave policy rates on hold. The post-meeting statement will be important. The part which is the most important is the forward guidance. And there, I mean, it's widely expected that they'd leave things unchanged. So there will be a hawkish bias. Basically, there is one more hike left sometime later this year. Not this one, but sometime later this year. So the statement will kind of leave the room open for them to be able to do that. Now, you know, let's just get back and circle the levels, tie the levels all in. So the support for the Nifty comes in at about 19,914. That's the low, the recent low. So 19,914 is the support. I would say, I mean, if the market's got to go up, I mean, the first sort of target remains 20,350. That's the equality level. which we've been putting out since we made that high the Friday before last. So 2350 in the upside, 19914 on the downside. This is the range broadly. The Nifty Bank is about 150 odd points away from its all-time high. And there on the way down, 45,674 should provide support. The Bank Nifty is headed to that all-time high for itself, which is 46,369. So, those are levels on both the Nifty and the Bank Nifty. As always, buying dips and deeper dips after the rally we've had is preferable than trying to chase anything. The GIFT Nifty is indicating a 65 point lower start. Sonia.
Absolutely. I think, the US markets on Friday were a bit of a weak link, right? And that's perhaps the reason why our own markets could also take it forward from there. The Dow was down. In fact, it was the second straight week of losses that the Nasdaq saw. So it looks like that's going to have a bearing on our own markets. It reversed its Thursday's gains as well. Now, as Prashant was also pointing out, the big event upon us will be that September 20th Fed meeting, expected to hold steady on rates. But an important commentary that has come in from Nomura this morning, where they said that the market focus will not be on what happens in this policy, but more on the dot plot and what the Fed announces in terms of a dot plot. And on that front, they are expecting the dot plot to show 3 rate cuts instead of 4 rate cuts earlier that they were projecting. So, that's just what the expectation is. Let's see. For now, for our own markets, we had a very, very strong run on Friday. In fact, the Nifty closed at a record high, held on to that 20,100 mark. And there was a lot of leadership emerging from pockets like autos and financials. So I'm going to continue to watch these two spaces very closely. And you also had both foreign and domestic investors buy in the cash markets on Friday. So FIs bought about 160 crores, DIs bought almost 2,000 crores actually in the cash market. So the money continues to come in, and so that's what we can expect as we go into trade this morning. But on the market itself, the GIFT Nifty is suggesting that it could be a bit of a weak start.
Well, that's right, Sonia. I think that buy on dips thesis gets tested yet again, but the trend is up, though there are some alarming signs, whether you look at the dollar index, Brent crude prices, or even the US bond yields out there. So for starters, we start on the back foot. Today, there'll be 2 indices that will actually play out expiry, weekly expiry. The mid-cap index and the Nifty Financial Services Index that normally has its expiry on Tuesday. Well, that'll take place today. So we'll have to keep an eye on both those 2 indices. The Nifty Bank, well, that's come to the party finally and given up its recent underperformance. And in the past week, you had an outperformance coming in for the Nifty Bank in comparison to the Nifty, with the Nifty Bank moving up close to 2.4%. And it was the Nifty Bank's best weekly performance in a while. In the last 8 weeks or so, we haven't seen returns of 2.4% in a single week. Not just that, it's just the second time in the past 8 weeks that the Nifty actually outperformed the Nifty Bank. So the Nifty Bank clearly is the one that the bulls have been betting on, and that's still about, and now it's within kissing distance of fresh all-time high. So I'll watch that index very, very closely. HDFC Bank, that needs to come to the party. Year to date, that's been a bit of an underperformer. The question is, has its time come? And it could very well be yes. Remember, it's a large weight on the index. It's valuation-wise as well, it's got some support. So I'll be tracking HDFC Bank from year on, because that could be giving up its underperformance, from year on. Moving to what do the FIs do? Well, you had the FIs that added close to 2.8 thousand long contracts. The long position continues to move up. It's now at around 66%. On the option side, well, they bought as well as wrote calls as well as puts, so no big data point coming out of there. But let's tell you how the options data is stacking up. There was writing that was seen at around the 20,200 and the 20,100 put. Now, the 20,100 put, the premium there is roughly around 50 rupees on an average. So the near-term support I'm looking at is 20,050 odd. At higher levels, well, you have the highest open interest on the call side at around 20,200. The premium there is around 100 rupees. So 20,030 becomes a bit of a resistance zone. The GIFT 50 suggests a pullback. The trend is up, so you'll be tempted to get in. Keep a stop loss at around 20,050 or thereabouts. And the hope is that the markets will recover from here on, because the trend has been up and buy on dips has worked.
Okay, the trend has been up, buy on dips has worked. So let's see how it shapes up for our own markets. But it is the start of a brand new week and the start of a truncated week. We're off tomorrow, so I'm sure the mood is going to be pretty buoyant as we head into trade today. But let me tell you what you can see in the next 2.5 hours. First up on the equities front, you have Chetan Seth of Nomura, who says the main focus for the market this week will be on the FOMC. He says the Fed is widely expected to hold policy rates steady, but market focus will likely be on the new dot plot projections and Chair Jerome Powell's press conference. He says the U.S. economics team expects the dot plot to show 3 rate cuts instead of 4 earlier. He says he does not necessarily think that this would be a hawkish outcome beyond any initial knee-jerk moves.
Okay, so money market views now coming in. This is B. Prasanna of ICICI Bank, who says that the dollar continued to rise on relatively stronger economic activity data in the U.S. and a dovish hike by the ECB. He says the CNY was supported by stabilizing Chinese economic data and PBOC intervention. He says the rupee is facing headwinds from a strong dollar and rising crude oil prices and traded with depreciation bias, while the RBI was seen supporting domestic currency, that's the rupee. He says the dollar strength will likely persist as FOMC is expected to deliver a hawkish pause and the rupee is expected to trade between 82.8 to 83.4 to a dollar.
All right, and on the bonds, V. Prasanna says the U.S. yields traded firm in the wake of strong economic data and supply pressure. He says back home yields inched higher, tracking the U.S. Treasuries, higher crude prices and a tight liquidity scenario in spite of global bond index inclusion rumors and softer CPI print. He expects the bond yields to remain volatile going into the Fed policy, where expectations are of a hawkish pause. He also expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.20%.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. But for the time being, we run you through the list that includes Tata Steel, Dabur, Defense Stocks, Texmaco Rail, Brigade Enterprises, and Restaurant Brands Asia. Their stocks will be reacting to positive news flow, while on the flip side, you have ONGC, Venetia Biotech, NCC, and then Lakshmi Bank that will be reacting to negative news flow.
Okay, well, Mark Matthews of Bank Julius Baer and Company is now joining us to take some questions. Mark, good to have you with us here. Thank you very much for your time. You know, the 10-year is about 4.4% in the U.S. now. Would you say that, you know, by the time the cycle is over, market interest rates will get up to where the Fed funds rate is at or will be at eventually? Where the peak is. So if that's the case, we perhaps have got some more to go, some distance more to go. What's your sense?
My sense is if that happened, it would be a first in history. And the reason I say that is this relentless rise in the bond yield, of course, means that the bond price has been falling. And if 15 weeks from now, the 10-year Treasury is still yielding 4.33%, where it is now, then we will clock in a negative return for 10-year Treasuries in 2023, which I'm sure you know will mean it will be the 3rd year in a row of negative returns. And for the U.S. government bond yield, we have data going back, believe it or not, 233 years to the year 1790. That has never happened before. So if the bond yield is going to go up to match the Fed funds rate, we're definitely going to get that 3 years in a row. And I just don't think we should. I think that, firstly, the oil price, the big rise in the oil price has not been accompanied by other commodities. And when we study similar patterns in the past where you've had a big rise in oil, but the rest of the complex has been flat or down, the oil rise is unsustainable. And we feel that the Saudi production cuts, which are the reason for the big rise in oil, are going to be more than made up for by the pariah states like Russia, Venezuela, and Iran. Property prices are falling because mortgage rates are high. And then if you look at the employment cost index, which is the Fed's favorite measure of compensation, it has been falling. That, by the way, was the reason they got hawkish back in late 2021 when it was rising very quickly. And it tends to follow the labor market's quit rate very nicely, and the quit rate has been falling pretty fast. So I put it all together. I think inflation's coming down, maybe not to 2%, but it's going to go back down lower than where it is now. And I don't see the need for the Fed to raise rates anymore, and therefore don't really think that bond yields should go higher than where they are now. But I must confess that they have been contradicting everything we've been saying because people didn't think they would go higher. And they have kept going higher.
All right, so you're saying that in this Fed policy, you don't see the need for the Fed to raise rates. Got it. But what about the dot plot? What is the expectation as far as rate cuts are concerned? Do you expect to hear anything of that sort in this meeting? If yes, how should, risky assets like equities look into that?
Well, I have read what you just said, that and I don't know where anybody's getting this, whether there's some kind of leak in the Fed that's purposely letting us know that they might be, increasing their forecasts for inflation and GDP growth and commensurately reducing the number of cuts that those participating officials are forecasting. But I don't mean to be mean, but the dot plot doesn't have a very good track record. So just because they say that, it doesn't mean it'll actually happen.
Hi, Mark. Good morning. You've been quite bullish on the Indian markets, but with, the dollar index at around 104, 105.5, you have Brent at around $94 per barrel, which, as you said, it's not sustainable. How do you approach the Indian markets, from here on?
Well, number one, I think technically they are breaking out. Number two, the benchmark for the world is the S&P, and it has had something like a 90% correlation to its seasonal average since World War II. And we all know the best time to be in the S&P is the end of the year. So I suspect that this consolidation that we're in now will be over by mid-October, and we will get a year-end rally for the S&P. And if we do, the Nifty can catch a ride on that. And then I'll just say, I don't think I'm revealing anything confidential, that we've noticed a big pickup in interest in India on behalf of our clients. I can't say I've seen that in 20 years. And why is it? I don't know. Maybe it's people throwing in the towel on China. Maybe they're just realizing that it is a good story, and they're willing to contemplate it now, whereas they weren't before. But I feel it is a good story. I feel that, with the NPAs down to very low levels, banks are lending again. There's a need for loans. The corporate sector is doing well, and that should translate into earnings growth in the high teens. Therefore, I don't see why it won't continue to go up.
Okay, all right. We'll leave it at that, Mark. Thanks a lot for joining in and giving us your thoughts. And have a great week ahead. Let's slip into a quick break. On the other side of the break, our list of top 10 stocks is lined up, so don't go anywhere. Welcome back to Bazaar Morning Call. Before we begin, of course, a lot of stocks to talk about today. But once again, wishing all our viewers happy Ganesh Chaturthi. It is, we kickstart all the celebrations starting with this festival. So hope you have a good one. But our research team is standing by in their festive finery to give us a list of top 10 stocks as we begin the day and the week. So let's begin with Tata Steel. Nigel, you're looking at that?
Well, all through the week, there were reports that indicated that Tata Steel and the UK government can come up with a deal. And, post-market hours on Friday, they in fact went ahead and officially announced that. Now, they've agreed on a deal between both the two parties, and they've announced a 3 million ton EAF steel capacity in the United Kingdom. Just to explain to our viewers, when you make steel by the EAF route, it's lesser pollutant than in comparison to the blast furnace route. And that was the need of the hour, moving towards green steel. And now they've come up with a deal. The total cost of this, transforming from a blast furnace to the electric arc furnace route, well, it entails an investment of close to £1.25 billion. Out of that, Tata Steel will be taking 60% of this cost, while you'll have the UK government that will be taking close to 40% of this cost. What are the benefits? Well, it transforms the UK unit into a sustainable, capital efficient, as well as profitable business. Remember, in the past few years, it's been profitable only in 2 fiscals. So this is a big move out there. And it's going to help them reduce their carbon emissions as well. And Tata Steel says post this upgradation, they're expecting 150 to 170 pounds improvement in their spread. So that's going to be the positives out there. 2 brokerages I'm going to highlight. ICICI Securities, they're saying the support coming in for this operations is very, very good, because now they won't be dependent that much on the parent, that's Tata Steel. And they're seeing incremental value of around 10 to around 16 rupees, depending on what cost savings you're looking at. So that's why they've increased their multiple, they've increased their target price. Axis Capital, though, they say the deal is not yet done. The employee cost still needs to be figured out. And according to them, it could be nearly around £300 million, which is still a question mark out there. And that's why they maintain their reduced rating with a target price of around 112. The stock opens up in the green, but let's see what it does from there. The street was anticipating this, and that's precisely what's happened. In fact, we'll discuss the deal in a little more detail with Amit Dixit of ICICI Securities in a short while from now. So stay tuned to that.
All right, the other stock that we're tracking this morning is Dabur. Now, Dabur management met with analysts, and the takeaways were quite positive, actually, so I'm going with green on that stock. They talk about how they aspire to drive a double-digit revenue growth in the medium term, and they want to also maintain a 20% EBITDA margin for FY25, so they're hopeful to do that. They say that FY24 growth should pick up further because the rural markets have seen a good improvement, and their target is to grow their domestic revenues by 1.5 times the FMCG market growth. Now, there are a couple of businesses that they have their eye focused on in terms of growth. One is the healthcare business. They have a revamped strategy under their new leader, Philippe Hedon. And the revamped strategy is, of doctor advocacy in their healthcare business. And that's how they're going to take it forward. So that's one thing. And the other thing is the home and personal care segment. They're looking at increasing their total addressable market as well via adjacencies. So brokerages are bullish. CLSA, Morgan Stanley and Jefferies, the views should come up on your screen. CLSA has an outperform with a target price of 620, Morgan Stanley with a target price of 600, and Jefferies as a whole with a target price of 565. So I'm going with green on Dabur this morning. But defense stocks are really in focus. Lots of orders coming through, lots of announcements from the government. So Vivek is here to give us the latest on that. Vivek, over to you.
Well, good morning. That's right. So post-market hours on Friday, the Defence Acquisition Council has gone ahead and approved an AON, that is the acceptance of necessity for further, you're talking about both equipment as well as a lot of weapons as far as the entire defense space is concerned. Now, one of the stocks that will be in focus on the back of this development is Hindustan Aeronautics, given the fact that the DAC has approved the AON, number one for Sukhoi 30, MKH aircraft, and also has approved the AON for an avionics upgradation of the Dornier aircraft, both of which that the company is present in. The next stock on our radar is Bharat Electronics. The company has gone ahead and said that they have received orders worth 3,000 crore. Now, out of this, the company has received orders worth over 2,100 crore from Cochin Shipyard. Now, this was for supply of various equipments consisting of sensors as well as weapons equipment. Apart from that, the company has also received orders from various segments totaling close to 886 crore. So far in FY23, BL has received very strong order inflows of over 14,300 crores.
Okay, thanks a lot for that. So BEL, that's of course a stock that has seen a big gain in the last many weeks and months. But the other stock that we're looking at is ONGC, and we're going with red for that because the windfall tax on domestic oil production has been increased to $16.4 a barrel from $11.8 a barrel. So, of course, in principle, this is negative for ONGC, so we're going with red there. But brokerages believe that this may not have too much of a damaging effect. Morgan Stanley has put out a note where they say that the net realizations of ONGC, despite the windfall taxes, the profitability of Indian refiners remains above the mid-cycle levels. So the net oil realizations have been consistently moving up post-COVID. The net realizations for ONGC are now near $80 a barrel, and profit per barrel lies beyond $21 a barrel. So despite the higher windfall taxes, the net realizations have been moving higher, and hence for Morgan Stanley, ONGC remains their most favoured play. They say there's also, apart from, realizations improving, there's monetization of the $100 billion investment over the last decade. Policy reforms are in favour of this company, and that all of that could support higher E&P returns. And hence, we're going with red for just the very near term because the tax on crude has been hiked. But in the longer term, brokerages are bullish.
Okay, all right, Sonia, thanks a lot for that. Well, let's wind this down. Surbhi joins us to fill us in with some more stocks that are in the news. Morning, Surbhi.
Morning, Nigel. So first one on my radar is NCC. Now, the arbitral tribunal has pronounced an award on 14th of September on the NCC versus Sepcom energy dispute, where they say that the Sepcom has to pay 198 crores to NCC towards its net claim of 606 crores. Now, the company says they're going to examine the award and impact on the financial statements, and they will take appropriate steps that may be advised. But for now, it's a negative for NCC. Texmaco Rail, the board has approved a fundraising of up to 1,000 crores via QIP and additionally a 50 crores by way of preference issues to the promoters. Brigade Enterprises, the company's subsidiary, acquires 5 acres of land parcel in Bangalore for 124 crores. Now, the company will be developing a residential project in that land parcel, which will have a revenue potential of over 800 crores. And lastly, Dhanlakshmi Bank, an independent director, has resigned from the board and citing various issues, including a rights issue, capital enhancement issues, whistleblower issues by the directors, and an unethical code of conduct of the bank's business.
Okay, Surbhi, thanks a lot for that. So plenty of stocks to focus on, but Vivek is also here with us to give us a list of the block deals that he's tracking this morning. Vivek, over to you.
Well, that's right. The first stock that saw a very large block deal on Friday was restaurant brand Leisha. And just like we highlighted on Friday, Everstone Capital was the seller. They sold 25.5% stake in the company out of the total 40.8% stake that they held at the end of the June quarter. But the list of buyers, is very strong. Plutus Wealth Management, ICICI Prudential, both of them picked up over 6% stake in the company. Quant Mutual Fund and Tata Mutual Fund picked up over 2% stake in the company. Amal Parekh, Franklin Templeton, Goldman Sachs funds, all of them picked up over 1% stake in the company. And the other stock on the radar, one we don't discuss too often, is Panacea Biotech. Serum Institute of India, has sold 4 lakh shares, that is almost 0.65% out of the total 6.97% stake that they held at the end of the June quarter. So that's another stock to keep on the radar on the back of selling by Serum.
All right, thanks a lot for that. It's a long list of stocks. Here's a quick recap. Stocks with positive news flow. There's Tata Steel, Dabur, Defence Stocks, Texmaco Rail, Brigade Enterprises and Restaurants Brand Asia. While stocks with negative news flow, there's ONGC, Panacea Biotech, NCC and Dhanlakshmi Bank. But let's also talk a little bit about the macros, right? The advanced taxes collected by the centre as of September 16th is 24% higher than a year ago, compared to only 14% higher taxes that was collected in Q1 as per media reports. Lata joins in to give us more details on that. Lata, positive there?
It looks like a very positive number, 24% higher. And already you have one comparison compared to Q1, the quarterly advanced tax payments. Last quarter was only 14% higher. But why this looks very positive is, we have only the April-July total tax collections data, gross tax, net tax revenue, everything, income tax, corporate tax. Over there, the total gross tax revenue of the centre was only 2.4% higher, April to July. Now, after adding the advanced taxes, how much it will be, we will not know. We will know perhaps by September 30th when the numbers will be released. Overall, the CGA website, Central Government Accounts website, is not updating. So we don't know exactly how much it will be. But, for all the GDP numbers, there was this big negative that all of us were thinking. If taxes are only 2.5% higher, won't it affect growth a great deal? This comes as a breath of fresh air. To be sure, the overall percentage will increase. See, this doesn't include income tax, and income tax in the month of July was less than what it was a year ago. So, it doesn't take away all the negativity, but it is a very big positive considering the background in which it comes. Remember, the budget had estimated about a 9.5% growth for all direct taxes put together. Compared to that, the 2.4 was terrible. It will certainly be corrected by the 2.6. April, July was terrible. That could be corrected a goodish bit after these advanced taxes are collected. And this is very, very market positive. If the GDP is very good, it actually impacts a whole lot of people. But when direct taxes look very good, it is actually the listed universe that has a large percentage of credit to be taken from this. Maybe the market already knows it. I'm not trying to forecast what the market will do. Maybe that's why it was running up. But it's important to say this is market positive more than just economy positive.
Okay, well, that's very well put, Lata. Thank you very much for that. So that's basically tax collection numbers sort of looking up. We'll take a very quick break here. Up next, Prakash Devan will be joining in with some fundamental stock analysis. Things that he likes, he wants to bet on. We also, as promised, will have Amit Dikshit of ICICI Securities to talk about Tata Steel's deal with the UK government for that steel plant and, of course, the transition to the electric furnace route. Stay with us.
Welcome back to Bazaar Morning Call. Prakash Diwan is joining in now to help us assess, what one should look forward to in the markets. Prakash, hi, good morning, and thanks for being with us on the channel. Dabur is the stock I wanted to talk to you about because the management is very confident, right? At the analyst meet, they speak about double-digit revenue growth, maintaining 20% margins, looking at, doubling down on their healthcare business in a big way. Do you think that there is a big runway for this stock from here on?
Good morning, Sonia. So I think the reason the stock is where it is primarily because of this perception that rural demand is still absolutely very soft. Now, if you look at the commentary that's coming up from some of the auto names or some of the other FMCG names, including the likes of Colgate and Marico and all, it's very clear that you're actually at the trough of the operational strength that some of these companies have. Now, Dabur has actually streamlined so much of its supply chain in terms of the production units that they have. Some of them are out of India and all of that. And if this healthcare thing takes off, it's a very margin accretive activity which will change the whole dimensions. Even with volume growth not picking up significantly, at least you'll end up going home on the margin, the profitability front. So I think it's extremely positive. I don't see any reason why at 550, 560 zones, Dabur needs to be questioned on where it is headed in the long run.
Prakash, hi, good morning. Just a quick word on Bajaj Auto, which saw a pretty large move on Friday. I think the stock was up about 4-5%. There was an upgrade as well, I think, from one of the brokers. We highlighted that. Any thoughts? Briefly, go on.
Good morning, Prashant. So I think it's very evident that last year, when Bajaj Auto lost some market share due to the softness in some of the global markets, particularly Nigeria and some parts of Latin, people had started writing it off, saying this is going to be a very deep, long-term kind of a softness, and it will take some time for revival. But in the process, what they've done is they've utilized that softness or that lull in the exports market to focus more on their EV strategy, which they were late to come to the market for sure. So that's kind of picked up. And those premium bikes. So I think what's working for them is they have four very distinct revenue streams. And after a long time, I think Bajaj Auto is seeing all these four revenue streams, be it exports, be it the premium segments, be it the EV, and of course your staple three-wheeler and two-wheeler market. That all these four verticals are doing so well. I haven't seen this in the last many years. So what's working for them is all those small investments that they made. The investments are very soft, and it's a very smart management in terms of allocating capital. They've done so well. The ROCs and ROEs will be very clearly at least 30-40% higher than what they've done in the last 3 years. So that's the reason the re-rating is happening, and a lot of it is irreversible because once you reach market share, once you reach new product segments, it's difficult for the competition to dislodge you. I mean, so I think they made a comeback in most of the places where they were weak. My sense is this: last year September, Sonia and I were discussing post earnings. I remember the stock went to 3,700, but then it's a significant comeback, and this could probably continue for some more time.
When I started tracking Bajaj Auto, the stock was 200 rupees.
Oh, wow.
And now, this is of course way back in the day, 2008. Yes, and so now it's, look at it, 5,100. So that's just the power of compounding, right? I mean, these businesses, we talk about them sort of day in and day out, but when you actually map the longer term, you see the kind of wealth creation that's there.
Absolutely. So buy good quality companies, well-run companies with the niche in their space as well, and over a longer term, you'll make some money. Well, Prakash, I wanted to ask you about this one, Vodafone Idea. It's been quite volatile. The street hopes that they can come up with some money. They've been making some periodical payments as well. The stock now is in double digits, 11 rupees 70 paise. And for this month itself, it's seen a move of closer to 30%. That's $3 effectively. But on a small base, it looks rather large. How would you approach the stock?
I think the entire space is getting reset very distinctly. So there is a clear acceptance by the market that Vodafone will continue to play a role as just as a third player, of course, but just as a respectable third player after the two large ones. And the 5G rollout focused by the other two names has actually given them some space to expand in even pockets where they were not very strong. So they have started focusing more on upgrading their infrastructure, repaying the likes of Indus. They've repaid close to 3,400 crores to Indus, I mean, which is significant, and to some of the smaller tower businesses which they use. My sense is that while Jio and Bharti end up kind of fighting it out on the 5G space and a lot of 5G derivatives, Vodafone will go into those pockets of 4G and some of the circles where it has a significant presence. For example, Mumbai, they still have a very strong presence. So that's where they are trying to kind of catch up and play. If things look up for them, they could at least organically start growing instead of degrowing, which means the stock would reset itself to a level of about 18, 20 bucks in the next year, year and a half. But then you don't need accidents in between. That's the whole idea. Something going wrong, somebody backing out, capex kind of getting impacted. So all of that, of course, are riders. But I think it has that merit to just because it's around, it's survived the toughest time. It survived the 104 rupees ARPU levels. Today you are looking at 200 plus. So possibly better times for the industry as a whole, and undoubtedly for Vodafone because it's continued to at least keep its presence intact.
There's also a listing today, right? Jupiter Hospitals, and we had a chat with the management. These are multi-speciality hospitals that they have, a very, very niche market. And this, of course, the entire space, the hospital space is done very well. Post-listing, if someone doesn't have any allocation in the IPO, post-listing, do you suggest one can buy this one?
Sonia, listings in this phase of the market, especially for smaller companies, which are more coveted than even the larger ones, given the nature of lesser free float and all of that, is a bit expensive. Most of these come at significantly well-priced valuations. So there's not much of room, and you have to wait for the organic growth of the company to justify any improvement. I would still go with tried and tested, more scaled-up models. Even though it's at an all-time high, my favorite continues to be Narayan Rodale because of the business model, the kind of diversity in terms of revenue and market segments that they cater to. So I'm not a big fan of IPOs, but of course we will definitely want to look at how it gets listed. So it'll be interesting. The space is getting more and more deeper and interesting. That's a very good thing for investors. But I'll stick to some boring stuff like NH.
Okay, all right. Prakash, request you to stay with us. For the time being, we'll slip into a short break. Up next, Anuj Singhal will be joining us to tell us how he's seeing trade set up. We'll also bring you the top stock picks for the day from our technical and F&O experts. And as promised, Amit Dixit of ICICI Securities will be joining in to discuss Tata Steel's deal with the UK government. You stay tuned.
Welcome back. There's 15 minutes to go for the pre-open session. Anuj is standing by with a quick check on how he's looking at the market this morning and this week. Anuj, good morning.
Morning, Prashant, Nigel, Sonia, and of course to all of you and to all our viewers, greetings of Ganesh Chaturthi. And as you know, Lord Ganesh is known as Vignaharta. Maybe all your problems be over this festival. I'll begin today with the chart of the day. I think this really is the chart of the day. The US 10-year bond yield. Now this is crossing a 16-year high. The last time we were above this level was in 2007. Then, of course, the global financial crisis happened and Fed brought down the rates to near zero. And now we have seen this uptick. It came off over the last few days, but once again has picked up. It's taken off. What that would mean is today you'll have to negotiate with IT stocks being weak. In the first hour, IT has been the strongest pocket, but today my sense is there could be some profit taking here. And of course, it's a big week for global market. You have the Fed decision, which comes on Wednesday. We react to that on Thursday morning, the weekly expiry. On Friday, you have Bank of Japan and People's Bank of China. They'll be coming out with their policy decisions. So globally, while it's not been impacting us so far, but it's always prudent to keep one eye on the global screen. So let's see. Also, there's the special parliament session. This rally started, remember, on the day the parliament session was announced. So if nothing big is announced, some profit taking is possible maybe. There's also mid-cap select and Fin Nifty's expiry today. So lots lined up. But you know, this has been a secular month for our market. Look at the indices. Barring an FMCG index, which has cooled off because of higher crude prices, almost every index has given you 4 to 7% returns. IT, banks, Nifty itself, mid-cap, small-cap. You look at metals, auto, capital goods. Almost every index has been up quite a bit. And within that, my sense is Bank Nifty is now showing you signs of leadership. HDFC Bank, Kotak, SBI, they've all shown signs of breakout. Even ICICI and Axis, they've also shown some strength. And my sense is maybe the market is pricing in a weak July to September quarter, but once the ICRR issues, incremental CRR issues over, October to December could be really good for banks, and that's what the market seems to be pricing in. But for the day, I think I'll want to keep an eye on the global screen and how that's impacting our market. It hasn't so far, but as I said, it would be prudent to perhaps keep one eye on.
Okay, all right, Anuj. Thanks a lot for that. Well, let's move on then, and I think we have Amit Dixit who's joined to discuss the big deal that was announced post-market hours on Friday. That's between Tata Steel and the UK government. Hi, Amit. Good morning. Thanks so much for joining in. Well, we were covering your note earlier when you said that you believe that this is a significant positive for Tata Steel, and that's why you've increased the multiple as well as the target price. But just a couple of points that still remain outstanding or unresolved. One is the employee restructuring cost. Do you expect the employees to come on board? Because some part of the street believes there'll be a tussle out there. And what could be the approximate cost that will be added to Tata Steel's books?
Yeah, good morning, Nigel. So this is certainly an important development from the point of view of business continuity and the sustainability of Tata Steel UK operations. As far as the employee restructuring cost is concerned, well, I see two parts to it. One is that do remember that the EAFs will create a scrap ecosystem in UK. So previously, all the scrap that was being produced, and UK is a good producer of scrap. So this was going out of the country, coming back in form of steel. And now, that would actually generate additional jobs if this scrap is used within the country. The second part, of course, is the restructuring part from transition from BF to EAFs. And that is something that we still need to keep an eye on. In fact, the management was also quite circumspect when they explained on the commentary. They were clear that there would be negotiations that will happen. And after the consultation, only it would be prudent to find out that what exactly would be the restructuring cost. However, they didn't deny that there would be an initial restructuring cost. Now, the extent to which it could be supported by the government still remains to be seen. So there are a couple of moving parts over there, to be honest. And unfortunately, at this stage, I'm not able to put any number on the restructuring part, particularly if when it relates to employees.
Okay. Amit, hi, good morning. The group expects this new facility to see almost 150 to 170 pounds per ton higher spreads. Is that something that you're assuming as well?
Yeah, hi, Sonia. So this one, again, this is a number based on, again, a lot of assumptions, I would say, at this stage. Primarily, one of them being that the carbon cost itself was roughly 70 billion pounds every year. And then couple it with the fact that they were not self-sufficient in iron ore, coking coal, and all these things were essentially imported. Now scrap is generated in UK, so the prices would be a little bit more, I would say, less volatile, and that should help them. So 150 to 175 pounds per ton, I would be, in fact, we would watch out for this number, but I don't think that that is unachievable. And also do remember that these assets were not exactly in the prime of their health. So this was in the fourth quartile, but the EF we are talking about is a 3 million ton EF, which is one of the largest EFs that could have ever set up in the world. So with these larger EFs comes also the economies of scale, coupled with the fact that this is going to be a new plant, replacing an old plant which was in the fourth quartile. So I think this 150 to 170 could be achievable, but we will have to wait for the details actually.
Okay, all right. Amit, I wanted to ask you, besides Tata Steel, that's out of the way, you believe this deal is positive, and that's why we've increased target price multiples as well. We have to wait in terms of consultation on this particular employee cost. But for the steel sector on the whole, we have steel prices here in India that have moved up. But now domestic prices are at a premium in comparison to imported steel. Do you see that as a risk to steel pricing here in India? How do you expect prices to move? And what about spreads? Because input costs as well have gone up along with steel prices.
No, so two things here, Nigel. One is that let us break it into flats and longs. So I would tackle longs first. Longs have actually overtaken flats in terms of price action in the month of August, particularly because they were lagging. So if you see the difference between flats and longs, it rose to around 6,400 rupees in the end of July. Traditionally, the difference has been 3,000 rupees. But now as we sit in mid-September, this difference has come down to 2,300 rupees. Now, having said that, flats have remained a little bit more stable in the recent times compared to longs. But longs is also governed by the fact that August was a little bit drier. So you had infrastructure, construction activity picking up. And in pre-election year, typically we find construction and infrastructure picking up. So demand-wise, in fact, my discussion with the dealers, with the companies themselves indicate that August was a pretty steady month. September is even better. And going ahead, we would see that as we enter into the structurally strong construction period, things would be much better for longs. Now, in terms of flats, there is one more thing that is playing out. In India, imported around, the imports of flats was around 3.1 million tons. If you see for the 6 months of calendar year. Now, since April, May, what has happened that the BIS certifications of some of the major companies that used to import in China and Vietnam have not been renewed so far. Now, therefore, imports have not been really booked in the country. If I look at South Korea, which was another importer, South Korea and Japan, they have taken a cautious call that they don't want to export steel meaningfully because of carbon emission constraint. So despite the prices remaining higher, domestic prices remaining higher, two factors, this BIS certification getting delayed, and the fact is that Japan and South Korea are not exactly that active, would play their role. Therefore, we expect these prices to be supported.
Okay, all right. Amit, thanks a lot for explaining that entire equation to us. Thanks for joining in as well. Let's do one thing. Let's get back to the markets because today is going to be an interesting day. On one hand, the GIFT Nifty is suggesting a weak start, but on the other hand, we've been sitting at record highs in the last week. So how do we approach it? Mitesh Thakkar and Sudarshan Sukhani join us now. Sudarshan, good morning and thank you for being with us as always on the channel. What do you suggest traders do at the moment? Because the highs have been, we've been hitting record highs day after day. Do you think this buy on dips is something that can continue?
Well, yes, for the Nifty, the buy on dips trade still continues. The important point is to understand that you need a dip to buy. That should be at least 100 to 150 points from the opening price or the previous close. So just wait patiently. These dips keep on coming, if not every day, probably every alternate day. But the Bank Nifty is giving a different story. Two different price patterns on Thursday and Friday tell us when new highs were made and for the current period and not sustained. That tells us that the Bank Nifty is prepared for probably some kind of a correction. So the buy on dip strategy is continuing with the Nifty, but the Bank Nifty now becomes an avoid.
Bank Nifty becomes an avoid. Gentlemen, good morning. Mitesh, what about you? Index calls first.
Morning, Prashant. See, we've been maintaining some kind of positive bias, and I suggested that the further continuation will happen if the Bank Nifty starts getting past 46,200. Highlighting the importance of that level, I think the Bank Nifty, if you look at the charts, we had the highest ever weekly closing at about 46,075 and daily closing was around 46,187 and there were intraday pivots at 46,200. So, we've been trading around that level, but not capturing it effectively. So I think, till we capture this 46,250 on a daily closing basis, I think there could always be a chance of some kind of a pullback because the Bank Nifty also in the last 7 days has rallied. So I think that seems to be the view. The idea would be to maintain a long bias, but to buy on declines. Closer to 45, 800, 850 is my preferred buying zone for the Bank Nifty. And on the Nifty, I think, getting closer to the earlier high, which should now act as a support pivot, which is about 19,980. So 20,000 levels, so around 150 points lower on the Nifty, I would want to buy. So for the indexes, I would be in a buy on declines kind of mode.
All right, let's do one thing. Let's take a short break on that note. On the other side of the break, we'll of course get back and talk about individual stock ideas as well. We'll come back with the pre-opening rates and stock ideas from Mitesh and Sudarshan. We'll also have Avnish Roy of Nuvama Institutional Equities to put focus on the FMCG stocks that are in the news in the last couple of days. Stay tuned. Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. We have a lot of stock ideas coming up for you with our guests. So let's get straight to that. Sudarshan, what is the individual, stock idea today? I mean, what are you looking at in terms of sectors and, individual stocks?
See, Tata Steel is now breaking out of a consolidation. That's a buying opportunity with a stop under 128. Tata Motors and Sun Pharma both have similar patterns. They are already in ongoing uptrends after having come out of consolidation patterns. That's a very cheerful chart pattern for both. Tata Motors is a buy with a stop under 610 and Sun Pharma is a buy with a stop under 1130. So my only intraday short is Indigo, where a systematic and sustained downtrend is in effect. So it's an intraday short with a stop above 2450.
All right, thanks a lot for that, Sudarshan. Hopping across to you, Mitesh. What about you? What are your picks?
So I have 2 buys and 2 sells. A couple of stocks which have gone into correction. I think one of them is Apollo Tyres. Would recommend selling here with a stop at 381 and looking at a short-term price target of around 364, 363 on the downside to begin with. The other sell call is HUL, which had a gap down opening on Friday and then closed lower. So that's showing some signs of weakness. That's a sell with a stop at 24.92 for targets of around 24.30, 24.25 on the downside. A buy on Bajaj Auto had a very massive price volume breakout on Friday. So in case you get a mild intraday dip, let's say around 5,100, buy with a stop below 50.25 and 52.60, 52.80 is my first target area. And a buy on Bandhan Bank, which I would recommend buying with a stop at 243 for a target of 262.
Okay, got that. Just take a look at the first rates which are coming through. Gentlemen, good to have both of you here with those respective trades. We'll come back to you in just a bit from now. The rupee starting at about 83.09, flat as compared to where it left off on Friday. And we'll put out some stocks as well, a bit from now. Chandan Thaparia is with us, derivative and technical analyst at Motilal Oswal Financial Services. Chandan, good to have you here. So just a quick lay of the land in terms of how the setup is looking to your mind, and what would you recommend?
Good morning, Prashant. Thanks for having me. Happy festival time. So looking at the index, we have seen good run-up of more than 1,000 points in just 10-12 trading session. And Nifty is making higher lows from last 7 straight days, and supports are gradually shifting higher. So as of now, till it holds about 20,000, trend is intact and we are looking for a rally towards 20,500. For intraday point of view, one can use the support near to 20,100 for a move towards 20,250, 300. So overall bias is positive if we are looking for intraday as well as the short-term point of view. Any decline could be both. That is the major trend and internal from the index point of view. If I look at the data point of view, Nifty has seen the surge in open interest. The total OI is now 10 billion to 12.5 billion starting from the series. So almost 25 to 28% open interest added with surge in price, which clearly indicates that longs are there in the system. Put call ratio is near to 1.31. India VIX is below 11. So all these data internals are also indicating the bullish bias of the market. So that is the reason that we are advising to hold a long position with major support of 20,000 to drive this rally towards 20,500. Now, talking about Bank Nifty index, it is just now near to its lifetime high of 46,369. So supports are intact until it holds above 45,750. We are expecting it to surpass the previous high and rally towards 46,750 level. Now, looking at the stock wise, positive on Grasim. This stock has given a breakout on the monthly, weekly, and the daily chart, making higher tops, higher bottoms. We have seen some long activity in the counter. Fresh breakout is clearly visible on the chart. So recommending to buy with support of 1935. And here we have target towards 2050. Second trading area, that is on TVS Motor from Autopay. Major trend is positive in the counter. It has witnessed some consolidation in last 2 days. And even seasonality also indicate the positive setup. In the month of September, in last 10 years, 9 times it delivered the positive return. So that is also indicating the positive setup of the counter. We have seen higher base of 1440, long built up seen. Even on the Friday, it has seen the 10% open interest. So recommending to buy with support of 1475. And here we have a target of 1570. Last trading area, that is from ITPEC, is buy on Tech Mahindra. We have seen fresh breakout. Major trend is positive. Open interest and other indicator are indicating on the positive side. So recommending to buy on Tech Mahindra with support of 1275. And here we have a target towards 1350 levels.
All right, thanks a lot for joining in. Let's shift focus now to the FMCG space. Dabur is one of the stocks that we're looking at this morning. Dabur had an analyst meet and they spoke about a lot of positive things. Abneesh Roy of Nuvama Institutional Equities joins us now to tell us how to approach this. Abneesh, I think the big takeaway for me from Dabur's analyst meet was the fact that they speak about a rural recovery now after FY23 being a very poor year for rural growth, right? How would you factor that into the stock? Because the stock has had a huge underperformance compared to the market, compared to the mid-cap index. It's barely grown about 2% this year. Do you see a catch-up now?
Yeah, thanks and good morning. Yes, we do expect a catch-up in rural. If you see now, as per Nielsen data, no FMCG category is declining. But if you see from a 2-year basis, still the rural growth is below urban growth for most categories. And El Nino has not at all helped in Q2. In Q2, if you see, 1 month had very high rainfall, 1 month had a 36% deficit, which was a 100-year low. That has definitely spoiled the overall rural sentiment for every form of consumption in FMCG. So if I see when we started Q2 and now for most companies, the rural growth has been slower. Coming back to Dabur, they are taking specific action. So the CEO who has come, Himalaya CEO, Mr. Philip Hayden, he is driving a lot of transformation in their healthcare portfolio. They are targeting allopathic doctors in a big way. Second, of course, is from a power brand, they are going towards power platform and expanding TAM significantly. And international business will grow faster than the India business, and they will see margin expansion this year versus last year. So overall, it's a good story in the overall FMCG, and definitely we are overweight. The health immunity portfolio is now back to normalcy. The Badshah Masala also should do well, distribution expansion. But overall, rural slowdown, I think, is still there for every FMCG company. It is not declining. That is the only, I think, positive. We have a buy and we have a target price of 725. So we expect the underperformance to recover.
Got it. You have, Abneesh, hi, good morning. Do you have coverage on restaurants brands Asia?
Yes, we have a coverage, and we did see that slight overhang of the promoter stake sale that has been addressed. Going ahead, definitely we see 2-3 triggers for the stock from a medium-term perspective. In the Indonesia business, they have given the guidance of cash break-even in FY24, and the Popeyes business in Indonesia should scale up. And also strong expansion in Indonesia and India will happen. India, we expect 450 stores in FY24 and then 700 by CY26. In Q3 for all QSR brands, there will be the festival and the Cricket World Cup recovery. Having said that, in Q2, most forms of discretionary consumption are weak. So we have to factor that Q2 will be weak. But yes, overall, for restaurant brands, we have a buy, we have a 146 target price. So we have seen very good quality investors really buying the promoter stake sale. But if I see 15.4% promoter stake sale is still left. And within QSR, we'll prefer players like Sapphire and Devyani and Jubilant from a medium and long-term perspective. Near-term, I think this slight overhang has gone for restaurant brands, but 15.4% stake is still left.
All right. Hi, Abneesh. Good morning. Abneesh, in the past week, we also had Grasim go ahead and announce the brand name. You have been positive on Asian Paints. Now, this is quite a formidable competitor that's coming in there with reach as well as distribution, unlike what we saw in the past when maybe JSW Paints tried to put a bit of a challenge. How would you view this entry of Grasim into the paint space? And will you continue to remain positive on Asian Paints?
So from a Q2 perspective, definitely very high rains happened in first month. So paint demand, exterior paints, for example, is very difficult when such high rains happen. Currently, crude is also back to now a multi-month high. So I think from a Q2 perspective, slightly there is a underweight stance on the paint stocks. Within paints, clearly we like Asian Paints the most. We have seen Sherwin-Williams, we have seen JSW Paints, Jotun Paints. Many players have come. No one has reached even a 2% market share. So in a 70,000 crore, if no one has reached 2% market share, that means new player like Grasim also will find very tough. And they will not be able to dictate marketing, the dealer commission or the margins or the advertising in a very big way because they'll be too small in the medium long, from a 3 year, 5 years perspective. But definitely for Kansai also it will be negative. So we do see Q3 numbers for Asian Paints being very strong because full festival demand will be there and margins will remain strong. In Q2 also I expect 400 to 500 with gross and EBITDA margin expansion for Asian Paints. So it's a slow volumes in Q2 but strong margins.
Okay, before we let you go, a couple of these big movers this year, right, in the FMCG space include names like Varun Beverages, that's up almost about 40%. United Spirits has had a very good run this year, up almost 20%. Something like a Colgate is up 30%. From here on, what would your top picks be that have both valuation and growth headroom?
Sure. So we like Colgate, Dabur and Godrej Consumer. As I said, overall rural is tough, but there is a leadership transformation clearly happening in Colgate. Even in GCPL, still some bit is left. And as I said, Dabur, Mr. Philip Hayden coming and a lot of transformation being driven by Mr. Mohit Malhotra also. I think these will be the clear overweights for us currently. Varun Beverages is something which we continue to like. There clearly, if they can get more geographies, for example, if South Africa business they can get from Pepsi, I think that will be positive. Having said that, whenever very high rainfall happens, the demand for the beverages goes down. So first month it was tough, definitely. But after that, it has been quite decent in terms of demand recovery. So those would be our topics.
Okay, all right. Thanks a lot, Abneesh, for joining and appreciate your thoughts. That's the word coming in on the FMCG space and all the, stock ideas as well as what you should be doing in that segment. But let's move on now. The market is all set to open with a tad bit of red, nothing alarming really. In terms of individual stocks, it is TCS, Axis Bank, Reliance and Bharti Airtel that are on the on the back burner a tad bit. Well, on the upside, it's Tata Steel, which is your big mover, up 2.5% on the back of the news flow. M&M, Cipla, Grasim are also looking pretty good. And in the broader market, something like a Dabur is not too bad. Sudarshan Sukhani is back with us. Sudarshan, what's the big call at 9:10?
Sun Pharma is the buy with a stop under 1130.
And Mitesh, what about you?
I'll go with a buy on Bajaj Auto on minor dips around 5100. Buy with a stop below 5025. 5260, 5280 is the first target area.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's hop across and let's do a quick revision of some top stocks that we should be tracking. Rima joins us first up to tell us about Indus Stars. Rima?
Thanks so much for that. So now, over the weekend, Vodafone Idea repaid about 1,700 crores, 1701 of spectrum-related payments to the DOT. It was due actually a month back, but the company asked for a 30-day grace period. But within that, they've done this repayment of 1,700 crore rupees. Now, Indus Stars, Citi has written on Indus Stars on the back of this. They're saying Vodafone Idea has cleared two substantial debt repayments in the past couple of weeks. One was a 1,500 crore NCD on 1st of September, and the second one was the one I told you, 1,700 crore of a 5G spectrum installment on the 16th of September over the weekend. According to Citi, Vodafone Idea should be in a position to start unwinding past vendor dues, including that owed to the tower companies from next quarter, even if the fundraise gets delayed from the promoters and the external fundraise. Also, valuations relative to peers and some of the recent deals that have taken place, and even compared to the company's own historical valuations, appear to be fairly reasonable. It offers upside potential, and the completion of Vodafone Idea's much delayed fundraise remains another key catalyst for Indus Stars. So Citi has raised the target price to 230, and they continue to have a positive catalyst watch on Indus Stars. Back to you.
All right, thanks a lot for that, Rima. Well, let's go across to Abhishek. He's watching AU Small Finance Bank this morning. Abhishek, over to you.
Well, there are a couple of brokerage notes on AU Small Finance Bank. Nomura, to begin with, has written on AU Small Finance Bank reduced rating and a target price of rupees 650 per share. They say that there are media reports which suggest that, AU Bank may be looking to acquire the MFI entity of Fincare Small Finance Bank, which is unlisted. Now, Fincare is predominantly a South Indian-based lender, which had filed for IPO in May of 2023. Fincare has an AUM of about 9,900 crores as of FY23, growing at a CAGR of over 23% in last 3 years. So gross NPA ratio and net NPA ratio are at 3.3% and 1.3% as of FY23. The Fincare merger would add about 15% to AU Small Finance Bank's AUM, which was as of FY23, and merger would be 4 to 6% book value accretive, EPS neutral and ROA dilutive, because ROA of Fincare is lower than that of AU Small Finance Bank. Such an acquisition will be complementary to AU's current business that they are having. DAM Capital has initiated coverage on AU Small Finance Bank. They have given a buy recommendation and a target price of 900 per share. They say that AU has transformed into a modern, well-equipped bank resembling a large universal bank. So they expect strong asset quality underwriting to continue going ahead, through which they expect the gross NPA ratio to be less than 1.5% and credit cost in the range of 40 to 60 basis points over FY24 to 26. So they expect a sustainable ROA of about 1.8% to 2% and ROE of about 16% to 17% in the near future. Back to you.
Okay, Abhishek, thanks very much for that. I think we have time to squeeze in, trading calls with Mitesh. Mitesh, what do you have?
As I suggested, I think, Bajaj Auto is the top call for the day on a mild decline around 5,100, buy with a stop at 50.25 for targets of 52.60.
Okay, well, thanks a lot for that. Let's head into the market opening now. Remember, we've sat at a record close. Last week, the Nifty was up almost 2%. So the bulls have been charging ahead. Just that this morning, you have a little bit of resistance around that 20,400 mark on the Nifty, and the global cues are not that supportive this morning. But of course, the big event is upon us, which is the US Fed policy. So all eyes will be on that. In the interim, looks like the market could just hover around this 20,100 mark on the Nifty. Let's take a first look at the index. It's not bad. It's down but not out, you'd have to say. Down about 50 odd points on the Nifty. It's a cut of 0.2%. The mid-caps are doing better in absolute flat terrain as we speak. The Bank Nifty is down about 150 odd points. Now, let's take you through some of the big gainers first. You have Tata Steel, which is up almost 1.5%. By the way, in the broader markets, BEL is up almost about 3% on the back of that big order win. So keep an eye out on that. But from the frontliners, it's Tata Steel, Cipla, M&M, Power Grid, Eicher Motors doing very well. SBI Life, HDFC Life. Life insurance companies also hanging on to the green line. And on the downside, the metal stocks, Hindalco actually to be specific, is down 1.5%. Infosys is down about 1%. So IT is taking a bit of a backseat. Anuj was also making that point earlier. Infosys, HCL Tech Mahindra are taking a bit of a backseat this morning. Bajaj Auto, Wipro, Divi's Lab and UPL are a couple of other stocks that are in the red today. LTI Mindtree is also down about 0.6%. Now the market is veering towards the red terrain. So mid-cap index is down over 100 points. The Bank Nifty is down 136 odd points. And the advance decline ratio, though, is still in favor of the advances. So I guess that's a positive thing for the bulls. But otherwise, it is a weak start, slightly tepid start, you'd have to say. Let's see, it could go either way from here. There's no directional move at the moment, just a little bit of a setback given the global cues.
All right, Sonia, well, keep an eye out on Vodafone Idea. The stock opened up well in the green. They put out a clarification now that Vodafone Idea is not in any discussion with regard to an acquisition by US telecom giant. So they've clarified on a news report that was doing the rounds earlier today. But the positive news is that they've paid 1,700 crores, including interest to DOT, with regard to the Spectrum auction installment. So that's why that stock is still holding up with a gain of close to 2%. BEL, they have bagged an order worth 3,000 crores, 2,100 crores out of that is from Kochi Shipyard. So that stock is well up and about in today's trading session. It was up 5%, still holding with a gain of around 3%. Dhanlaxmi Bank is under pressure. Independent director has resigned from the board, citing various issues, including the rights issue. So that's why that one is down close to around 4.5% in volumes. Massive out there, down 6% now. NCC has been an arbitral tribunal awarded 200 crores in terms of compensation in comparison to the 600 crores that were net receivables in the SEPCOP case. So that's why I think NCC, well, the street has read that positively that they're getting some money. But otherwise, they've asked for around 600 crores. They've been granted close to around 200 crores odd. For the time being, the street is taking that positively. Aditya Birla Finance IPO, that seems to be moving forward. So AB Capital could be one of the stocks that could be in focus as well. So keep an eye out on that one. AB Capital should come up for you on the screen. A couple of more stocks that are moving around. GNFC, I'm not sure what's wrong out there. The stock is down 4.5%. That's one of the top F&O losers in today's trading session. And a couple of these other defense names as well. Because of the positive news flow from the Defense Council, you have Hindustan HAL, that's up close to around 2.5%. So that's doing pretty well. And Dabur, post that analyst made, the stock up close to around 1.5%. On the Nifty, Prashant, still down close to around 50 points, but I think that's par for the course.
Oh, yeah, absolutely. I mean, we're at about 20,140 on the Nifty, which is 50 points lower at this point in time. So, slowly but steadily, the top 3 or 4 slots in terms of gaining stocks in the broader market is all defense. So, and the largest volumes as well. So, BEL is top of the list now, volume-led gainer, 3.25% higher. Vivek was highlighting that as part of stocks with news flow. There is Mazgaon Dock, which has moved up. It's up 4%. So, stocks at about 23.56. Hindustan Aeronautics, HAL, is up 2.6, 2.7%. So, yeah, I mean, those are the 3 names, all defense, by the way. There's news on Idea. So Vodafone Idea is basically denied rumors the company talks with other US companies, etc. But the stock is still up about 2.5%. Volumes are pretty large as well. There is UCO Bank, which is up 3%. PSU Bank rally, right? That was a big feature all of last week. And, UCO is the only one that I can see at this point with the volumes there, and that's from that space. Ease My Trip is coming up with a 7% gain. Stocks at about 43, Ease My Trip. There is Garden Reach, again, defense, which is coming up with 2.5%. And Bharat Dynamics is another one, which is up about 2% or so. So you basically got 5 defense names, which are, there in the top 10 list. So a pretty, big one there. GMR Power is another one, which is up 6%, has done very well recently. Shakti Pumps was up, I think, 10-11% on Friday. That's following up with the 2.5-3% move this morning. Karnataka Bank is up about 4% or so. Saturn Credit Care is up 3%. And so it goes. I go down the list, volumes thin out a little bit. But I have to say that even with the Nifty down 50 points, market breadth is positive with almost, not quite, about 1.5:1 kind of advances to decline ratio. So that's the overall picture. The Nifty is down about 55 odd points or so. Andrew Holland is now joining us. He's Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. Andrew, good to have you with us here. Thanks very much. I think from the last time that we spoke, you got that one day, which is last Tuesday, where we saw a bit of a shakeout overall in the broader markets, mid and small caps, etc. And then, right back, markets moved on, especially that part. What's your sense, Andrew? For some time now, oil prices have been a little uncomfortably high. US yields have been high, but things are looking pretty all right. Otherwise, your sense, near term.
Right. I mean, there's a lot of things which should concern us, including bond yields, oil prices, stagflation in Europe, China. But as you say, it's not impacting our markets at the moment, and that's because I think it's still a bit. The data out there is still very messy globally. So you go from 1 week of thinking that there's a more Goldilocks soft landing to the Fed might have to kind of increase rates one more time this year. So that's kind of lending itself to kind of markets going really nowhere. Over that period in terms of you're not seeing any big falls because of these headwinds or potential headwinds globally. So our markets has continued to enjoy the momentum because obviously, the feeling is, just reading a report from CLSA about, Jefferies from the Hong Kong, investor conference saying that, everyone loves India. No one likes China. So that kind of flavor continues globally towards India, which is good news. And I think that positivity is reflected in our markets. I'm not sure what happened last week in terms of the small and mid caps in terms of that fall. Perhaps it's just taking it from that wholly overbought zone to a more just under that. So I think our markets will probably head higher. We'll probably go into overbought zone and then correct mildly from there in the short term, unless any of these global headwinds really start to play out, Prashant. And obviously that timing is difficult to catch at this present moment.
What are the red flags for this market now, according to you, Andrew? I mean, do you think crude as a headwind is something that could derail the market? The upcoming elections is something the street is watching out for very closely. There is this looming fear that there is perhaps not just a global recession coming, but a correction coming in our own markets as well. But nothing is played out just yet. Do you think that's an irrational fear?
No, I don't think it is. I think, if I think about, the possibilities of what could happen in the US in terms of the commercial real estate, in terms of, any stimulus that the Chinese government does, which is a lot larger, than the markets expected, would obviously push up commodity prices, including metals, a lot more, which is not great for India. If China does nothing, the yuan will continue to depreciate, which puts, emerging market currencies, including ours, under pressure. Again, bad for inflation. There's no monsoons. The monsoons are poor. El Nino is still being talked about. So, if you throw all that into your thinking, then markets should be for a correction. But when momentum's strong, you keep with it. For the time being, there's nothing wrong with India. I think I'm very constructive on India going forward, but the global factors are messy, and that's what concerns me more.
Hi, Andrew. Good morning, Andrew. What are you making of the kind of move that we're seeing in some of these PSU banking index? Even today the markets are under pressure, but the PSU banks, they believe there's more to go. Are you looking at that space, or will you stick to the large private sector banks?
Yeah, I mean, I think we've always had this view that, when the banking sector has a run, then the PSU banks will surely follow. But it's a sector or a subsector, which we've always said, for many years, that it's an area we'd like to rent and not own, on a long-term basis. So, when you have these kind of runs in the banking sector, then PSU banks would be a good trading side of making money, but not for a long term, not on a long term view.
Okay, not a long term view. So you're saying that these are trends that one can perhaps latch onto for the near to medium term, but PSU banks as a category has not given you returns. But don't you think that narrative is changing now, Andrew? Because if you see it not just with PSU banks, which is something like a defense space, the capital goods space, for example, right? I mean, BHEL is starting to perform after 5 years of a lull. Don't you see some of these laggards now enter into some sort of an upcycle, structural upcycle?
So I think the defense sector is slightly different, but I'll come back to the other points as well. It's slightly different in that, this is a global trend. We'll see more and more countries, including India, spend more in defense. So that's great for the defense stocks. Unfortunately, it's always lumpy. You never know the timing of these contracts. And that's what will drive the share prices continuously higher. Not the execution, maybe, but certainly the order inflows. In regards of some of the other companies you mentioned, the fact is that they were laggard for a reason. Yes, it's okay, they can catch up. But, you got to question, why were they a laggard before? And the laggard reason was because their execution was poor. But if you go through the last cycle of the CapEx cycle, that 2004 to 2009, most of the companies' share prices did well because of order inflows rather than the execution that they did over that time. So if you think there's more inflows for these companies, great, you'll make some money short term, but I think long term you'd always have to keep a wary eye on how they execute.
Okay, how you execute. Andrew, anything else? Any other idiosyncratic single stock kind of opportunities that you see for owning, renting, anything?
continue to like the kind of beverage theme, non-alcoholic and alcoholic, as the premiumization continues to work through, like the electronic manufacturing sector, both for domestic and global exports going forward. But I think if I was to look at one area which is probably more short term, would be the impact of a higher oil price, which the narrative out there, Prashant, you've seen it, is for $100 oil price in the very near future, and I think someone from I think Saudis are talking about it maybe today or tomorrow. If that was to be the case, that would have a negative impact for a lot of companies in India. So that would be the theme. And obviously, you can think about FMCG, you can think about paints, you can think about these types of companies which would have their input costs starting to increase quite quickly, of which maybe this time they won't be able to pass on.
Andrew, how have you changed your positioning, your long-short positioning, say in the last couple of months? Because momentum has been strong, but as you have highlighted, there are some red flags that are emerging on crude, the dollar index. The global markets, as you said, global economy on the whole is a little bit messy. So how have you changed your long-short positioning?
So it's really been obviously a little bit more dynamic than usual, but we kept more on the long side because the momentum is there. And again, Nigel, it's difficult to work out when the change or when some of these factors will play into the markets and bring them down. So we think it's going to be probably sooner rather than later because we're getting to overbought zone in the Nifty. So something will happen out there which corrects us mildly, and hopefully it's not too serious in terms of the global factors.
Okay, all right. Andrew, thanks so much for stopping by, giving us your view on the markets as well as on individual sectors. Wishing you a good day ahead. But we were talking about the sector that's outperforming. That's the PSU banking space. And Bank of Baroda is the one on our radar. They have unveiled a new festive campaign. To understand more about that, as well as business prospects, we're joined by Mr. Joydeep Datta Roy, the Executive Director at Bank of Baroda, who joins us on the show. Hi, Mr. Roy. Good morning. Thanks so much for joining in. Well, I'm looking through this offer that you've put out. You seem to be focusing on both the liability side as well as the asset side in this festive offer. What are the offers and what kind of response are you expecting to see from this?
Thank you. Thank you for also having me on the show. Of course, festival season is traditionally a season where we see growth see an increase in the growth rates from the previous quarters. This year definitely will be no different. The demand outside is quite buoyant. We are seeing a uptick in the consumption, etc., happening, the spending as we get into the festival season. So that coinciding with all of that, we have brought out this festival season package, which will run up to the 31st of December for a period of 4 months, and we expect to do definitely around a 15 to 20% higher growth than the previous quarter, and then the previous festival packages that we have given in the past. Sure. This is a comprehensive package. Yeah.
Got it. So, sorry, this Joydeep, this 15 to 20% growth is you're talking about in credit growth, and that's in this particular quarter, is it?
Yes. From the previous quarters.
Okay, from the previous quarter. Got it. What does this mean in terms of specific segments? Just trying to understand, where are you seeing maximum traction coming from? Whether it is in the personal loan space, or in autos, in generally in retail, in corporates. Where are you seeing maximum traction coming from this festive season? And would this change your, full year outlook in terms of both credit growth, deposit growth, etc.?
So the maximum traction, of course, is in the retail segment. So we have been growing at around plus 20% levels over the last couple of years. Actually, that's above industry. The industry has been growing retail at around even 20% levels in the industry. Also, we have grown almost 3 to 4% higher than industry. So from that perspective, I think we think we would be able to continue that sort of a momentum as far as the retail space is concerned. That's the fastest growing segment as I look at it, even for our bank. So this festive season should definitely see a higher sort of uptick, more from the economic factors which are playing out outside, the economic consumption and all of that. And plus, at the same time, I think our package and the concessions, etc., that we have built in, we should be able to take a much larger growth rate here.
So you're saying that the bigger traction is coming in the retail side, and retail, I think, overall is about 25% of your overall book. Would this also mean a rise in unsecured loans? Because this is something that the RBI has, spoken about as well, that they are concerned about the sector seeing a rise in unsecured loans. Just wanted to understand, what is the percentage of unsecured loans in your entire loan mix? And given that retail is picking up, do you see any kind of pressure in terms of asset quality, etc.?
So unsecured loan for us, of course, is the highest growing in terms of percentage terms. But I think we are at a lower base, number one. And number two, the type of personal loans that we do in the bank is more to our existing customers. And it's largely digitally driven with a lot of underwriting based on data-based underwriting, etc., which is happening, which makes our personal loan book a lot secure. So from that perspective, even though the growth rates in the personal loans is higher, but I don't see any sort of issue around that, largely because it's to our own customer base that we are actually penetrating. So amongst the personal loan,
Yeah. So basically you've seen the customer behavior, you've seen so you know who you're lending to, basically. These are not new customers. They've taken other loans and they've serviced it over a cycle. So in that sense, there is comfort. Mr. Ray, hi, good morning. Mr. Roy, good morning. Prashant here. Just a couple of questions. On the, so this 20, I think the retail loans are, as a percentage of overall advances are about just under 25%. Where will this be? Because you are far behind. I mean, your peers. You take SBI as an example, much larger player, or you take some of the private sector leaders. Will this be the focus point? Where will this be, say, 2-3 years down the line? This number.
So even the bank's sort of thought process is on growing the retail book faster, and that is why you see our growth that has been happening. We are growing around 3 to 4% higher than industry on the retail side. So our market share also is growing on the retail side much faster than in the other segments. Even in the loan composition that we have, the loan composition right now, of course, is tilted on the higher side for corporate. But next
Mr. Roy, so
SBI,
SBI is at 42%. Would your aspiration be to go from 23 right now to what? And by when? Is there an internal kind of roadmap?
Yeah, so even our roadmap is to get into a loan composition which is roughly around 40-60 to start with, and of course taking it even further maybe with time. But the idea is to directionally we are moving there.
All right, Mr. Roy, just for this year, that's for FY24, the overall credit growth should be in mid-teens, around 15%. That will be led by retail. Is that something that you should be sticking to?
Yeah, so roughly we see a credit growth of around 14 to 15% overall.
Got it.
And
all right.
On the retail side, it would be plus 20% definitely.
Got it. And I also wanted to confirm your NIMs. The guidance I think was around 3.3%. Or do you stick to that?
So we had given a guidance of around of doing a similar kind of a NIM which was there for the full year last year. So there could be some inter-quarter sort of plus minuses, but for a full year NIM, we stick to a near about NIM of which we had last year, which was around that 3.3 levels.
Okay, all right. And just wanted to ask you, with regard to recovery and upgrades, I think in the first quarter, the number was around 2,500, 2,600 crores. For the year, I think you were guiding for 12,000 crores. That as well holds, right?
That also holds, definitely.
Got it.
Okay, I think that summarizes everything. Thanks a lot for joining in. And
One more question, Sonia. Just another segment which you've been focusing on is the MSME segment, right? Now, but I think the slippage levels in that segment are pretty high. I think you're going on opening dedicated branches, dedicated infrastructure, personnel, etc. So a big thrust there. What's the game plan, and what's your exposure in that space, and what do you want to do in the MSME space?
So MSMEs, of course, in terms of overall economy, also if you look at, this is the space which is actually a growth driver for the country also. And in terms of credit, new to credit to MSME enterprises, the country has still not really seen the type of penetration that should happen. So there's a lot of new to credit enterprises who are now getting into the formal credit mechanisms, and that is a large gap which is getting covered. And in terms of demand and supply, I think there's a large gap that is to be fulfilled from the formal financial sector, including the banking sector. So that is where I see a lot of growth, and even in the bank, I think we are focusing on quality of the underwriting process. We are focusing on clusters. We are focusing on places, geographies where there is a demand. And that is why we have opened up almost 300 MSME branches. We have reclassified some of our existing branches. We have opened up new branches with new manpower, new teams who focus on the quality, who focus on underwriting, who focus on getting new enterprises to come onto the MSME growth path. And that is where I think we will see a sort of a growth in MSME space also.
Okay, just one final question on the asset quality. You were making a mention of it earlier. In the quarter gone by, actually, your asset quality has, I think, been the best in the last 8 years. So your gross NPAs are at about 3.5% or so. Is there scope to improve asset quality further? And if yes, what is the kind of target that you're looking at in terms of gross NPAs by the end of the year?
So we don't give any guidance on the overall gross NPA numbers, but in terms of the overall slippage ratio and the credit cost, I think there's a guidance. But I think on the NPA numbers also, the trend, we are seeing a downward trend. We probably would see the gross NPA numbers coming down again quarter on quarter. And the net NPA numbers also are now below 1. We definitely would, the endeavor is to keep it at that level below 1 itself.
Okay, all right. All the best. Thanks a lot for joining in and speaking to us. That's Bank of Baroda. Big move actually in a lot of these PSU banks. The stock is now up almost 2.5%. They are seeing a 20% growth in the retail, credit growth in the retail space, and they are looking to keep their net NPAs below 1%. Let's slip into a quick break. On the other side of the break, Shalabh Saxena, the MD and CEO at Spandana Spurti Financial, will be joining in to discuss the company's business update. Later, we'll be also joined by Nilesh Gupta, the director at Vijay Sales, Kumar Rajgopalan, the CEO at Retailers Association, to discuss demand environment ahead of the festive season. Stay tuned. Welcome back. Let's talk about Spandana Spurti now on Corporate Radar. It's the next corporate that we're looking at. Shalabh Saxena, the MD and CEO at Spandana Spurti Financial, joins us now to discuss an outlook on their business and any future stake sale plans that the company would have. Shalabh, thanks a lot for joining in. I want to start by asking you about how demand trends are shaping up at the moment. What is the kind of disbursement growth that you're looking at, over the next couple of quarters, and what do you think you could end the year with?
Thank you. Good morning to you and all your viewers. Starting with the demand is fairly stable. I mean, the demand has been stable for the past 4 to 5 quarters, and we are the beneficiaries of that stable demand. Number one. Number two, the quality of customers that are approaching us or we are acquiring is also a good delta over the past. So to that extent, from a quality portfolio point of view, is also something that is heartening. That's number two. Number three is to your question as to where are we going to end the year. Beginning of the year, we had guided that we should end the year at around 12,000 crores of AUM. We started the year at about 8,000 odd, so 8,400, 8,500. We are sticking to that, and I think we are on course to kind of get that number.
Okay, so 8,500 crores is how you started the year. 12,000 is where you lend. So you're saying you're looking at a 40% growth in the AUM by the end of FY24?
Rough and ready, yes. It's a small base, so, so 40% is probably, has to be looked at in context.
And what does this mean? If you're looking at a 40% growth, what does this mean in terms of asset quality? Can you give us an outlook on that as well?
Yes. So if I turn the clock back to when we made this, we had guided a 2% credit loss in the financials that we had paid. The last, if I just reel out the numbers of the last 2 quarters, March of FY23, we ended at 2.07. Quarter 1 was at 1.63. So it was lower than that. So, I think you would be fine on that.
Shalabh, hi, good morning. Could you we'll get back to some of the financials and how the business itself is running, but just if you can update what is the latest in terms of how much stake does Ms. Padmaja Reddy now own in the company?
She has 13% and some bips above, just about 13.1, 13.2, rough and ready.
13.4%.
Yeah, rough.
13.1. Okay. So this is her along with her husband, the total stake.
That's correct.
So from 17%, I think same time last year, it's down to about 13, a little over 13% now, right?
Yes.
And do you have any communication? I mean, should we expect more in terms of share sale?
So, look, that is something for her to answer. You asked me a statistical question. I have given you a statistical answer. Obviously, this is a shareholder matter. It doesn't really, we are completely focused on what we to deliver. This shareholders, it's their call.
Okay. All right. Just since we're talking about, the shareholding, Shalabh, I wanted to ask you about Kedara Capital. There were some reports that indicated that maybe they are looking to sell their stake and maybe one of those banking names could emerge as the buyer. You want to clarify on that?
Look, so I have been on this show and I've kind of given the same answer to the same question. When the new management joined, which was in 22 of March, we presented to the board a Vision 25 document where we said that we are going to take the company to a 17,000 crore number in 3 years from 22 to 25. The board agreed to that, and the board is completely behind us when it comes to the delivery. Number one. Number two, everybody believes that there is an opportunity in the market, and hence it is a good time to really capitalize. So while I do not know about there were media reports, but as far as we are concerned, and even the board for that matter is concerned, it was completely endorsed the plan at that point in time. We continue to chug along.
Okay, all right. So as of now, no communication whatsoever, but that's something, that the stock market will be looking forward to, but no comment as of now. Well, tell us about your cost of borrowing. That would have gone up, right? Could you tell us by how much? And what would that mean in terms of NIMs from here on?
So cost of borrowing for the last quarter was about 12.3%. As far as we are concerned, and I'm sticking my neck out and saying that as far as we are concerned as an institution, I think we've maxed out as far as the borrowing rate is concerned or borrowing cost is concerned. There were quite a few public sector institutions that were not really a part of our family or a part of our the entire lending pie, which has started coming in. So this quarter and the next quarter should see a few PSUs walking in, which should push the cost of borrowing south. So that's the cost of borrowing answer. On the NIMs, we were, in the range of about 13.8 to 14%. Last quarter, we were at 14%. I think, we are comfortable in that range. So any range between 13.75 to 14 is a good number for us to kind of move on. Obviously, the repo rate plays a part in this whole thing, but as of now, that is holding up, and we are holding up as far as this whole 14% is concerned. Assuming, sorry.
Sure. Sorry. So on cost of borrowing, it's interesting. You're saying that you've peaked out and it was 12.3%. So you're expecting it to go south in the remaining quarters. Any target that you're looking at in terms of cost of borrowing by the end of the year? From 12.3, how much could it come down to?
So these things really, broadly, directionally, NIMs is what, ultimately it leads to. And in our guess, a range of 1375 to 14 is what we would be comfortable with. Anything more, we would look at passing it to the customers. And, let's see how the macroeconomic situation plays out.
Okay. Any co-lending model with banks that you're looking at over the next, say, 1 year or so?
So at this point in time, we are looking at building our own book, plus some bit of direct assignments, PTCs, etc. Co-lending opportunities, we've been approached by various institutions. For now, we are just kind of given it a pause. At a point in time, we will pick it up. But at this stage, we're just kind of holding it. We're just building our book.
All right, Shalabh, last year the AUM, as you said, was around 8,500 crores. You're seeing that number move to 12,000 crores and then moving to around 17,000 crores. How do you expect this to happen? Give us some kind of a trajectory. Ticket size will change. Is that a driver? Will there be some geographic diversification that you're looking at? A couple of details in terms of the path towards that 17,000 crores.
Sure. So, and it's a very important question. So fundamentally, and, I've been making the statement often again, fundamentally, we believe that the growth in our institution will come from customer acquisition and not ticket size, number one.
Okay.
In fact, over the next few quarters, you will see our average indebtedness at a customer level going down. That's number two. Number three is, as far as the geographical expansion is concerned, when we presented that plan, we had identified 7 states where our market share was very minuscule. Those are the 7 states broadly and mostly up in the north, with an addition of Tamil Nadu in the south. So those were the 7 states, which we had kind of identified. Most of the growth will come from these states because they are new markets for us. New market as in contextual, not completely brand new, but we kind of wanting to scale it from the current 0.3, 0.4 market share to maybe a 2.5%. So for Spandana Spurti, the growth will come from these 7 states. And at an enterprise level, we will continue to focus on customer acquisition. Just to give you a sense of numbers, last year we acquired about 8.8 lakh customers. This year, I think we should end at about 1.1, 1.2 million customers. So that's we completely, from a philosophy point of view, we believe in more customers, lower ticket sizes.
Okay, got it. So yeah, those 7 states, right? I mean, I think you did say last time also 26% of the new borrowers were from these 7 states. So just one thing, Shalabh, just before we let you go, is there a change in the guidance? Because what I have written down is that in August, you'd said, late July, you'd said that the microfinance AUM should be about 15,000 crores. Is there a change here?
No, so the way it is stacked up is microfinance will be a 15,000 crores. Plus, we've launched 2 new businesses, loan against property and nano MSME loans. That will contribute 1,000 each. So that is the composition of the 17,000.
Okay, got that. Just wanted to clarify. Thank you very much for joining us, Shalabh. Appreciate you joining in and clarifying on all of those things. Thanks indeed. So that is Spandana Spurti with some perspective. The market, by the way, is picked up and how. We are down just 15 points or so on the index. And this is, a vast improvement compared to where we were earlier on in the day. So let's just take a look at where we were. The opening was made, the low was made right at the open. That was 20,122. And from there, we've come up about 50 points rebound from the day's low. There was also a flash, Prime Minister Modi to speak at 11 a.m. And I think there will be a lot of focus around that. In terms of what the message and, so that'll be interesting to watch for sure. Now, as we kick off the festive season with Ganesh Chaturthi tomorrow, let's get a sense of how demand environment with respect to consumer is shaping up. Nilesh Gupta is director at Vijay Sales and Kumar Rajgopalan is CEO at Retailers Association of India. Gentlemen, great to have both of you here. Thanks very much for your time. So the data that we have, last data that we have is for the second quarter. And if you look at the second quarter numbers, both staples, right? So listed staple companies, volume growth has been, very poor. Multi-quarter low volume growth across the board. Even durables, ACs, fans, washing machines, etc., we've basically been seeing a degrowth. My question, Nilesh, let me come to you first. Are you in the second quarter, have you seen a turn? Or has it been poor, and what is your expectation?
So good morning. What we have seen in the second quarter is definitely a slight improvement over the first quarter. So let us also understand in the first quarter, the summer did not do well because of the weather conditions. We had interspersed rains all across the country, and due to which the AC sales took a hit. But going forward in the second quarter, we also had bouts of hot weather across the country, and the ACs have started picking up. And we have seen a lot of positive movement in the second quarter. Secondly, another thing which I would want to impress upon is now we are no longer talking only of unit numbers. We are also talking of value. So value-wise, we are seeing a steady growth happening for the last 1 or 2 years, which is growing. Value growth is happening quarter on quarter. So ultimately, it's the business which matters, whether it's volume or value. Definitely, if both grows, nothing like it. But at least you have one silver lining in the terms of value, which is growing. And most importantly is the 15th August, which we went. Why? It was one of the best 15th August we had seen in terms of footfalls and conversions. Looking at that, I think the coming season should be very good.
Should be very good. Mr. Rajagopalan, what are you seeing, sir, across retailers? What's the data?
See, the months of April up to July, the retailers have seen about 7% growth over last year. But we'll also need to give cognizance to the fact that April, May, June of last year was really good because it was a real, the cheer back to the store kind of a concept, right? So everybody was and were shopping quite a bit. So the growth per se was not as great. And inflation definitely had its own amount of worry for sure. And that worry kind of continued to some extent. So the bottom of the pyramid consumption has got impacted for sure. The other part is that in the month of August, now the data that's coming up immediately is around 9% growth, which is not bad, from 7 to 9. I think most retailers would be happy as soon as it touches a double-digit growth. So it looks like the trajectory is right. It looks like people are going to be shopping. And the inflation per se is not so dramatic. However, we do know that as far as food is concerned, there has been definitely lots more impact for day-to-day consumption items, and that's a worry.
Okay, all right. Noted that point, Mr. Rajagopalan. Mr. Gupta, coming back to you, and personally, I would like to give you feedback. I visit your Bandra store, and I think the help that you get out there is very, very good. I recently went and purchased a washing machine, and the way they educate the customers as well is amazing. So good on you and good on your team as well. But let's focus on pricing. Let's focus on pricing. What about discounts? Have they narrowed right now, or are they at the similar levels that you've seen in the past? Broad sense on pricing.
So as far as pricing is concerned, I think we are at the more or less at par throughout the year, and in the years which have gone by, the discounts are always there. But also we have to understand one thing in our industry now, more than pricing, it is the EMI offers which matters. Okay, how much down payment you are asking. Most of the products have now started coming on zero down payments, and the tenors have increased. So earlier we used to have the most popular scheme used to be 4/8, where people used to pay 4 down payment and balance in 8 months. Now we are getting 0/12, 0/8, or maybe 3/18. And in case of mobiles and all, you also have 0/24 months. So I think that is what is propelling us for the higher value growth which we are seeing. And discount, coming back to your main question, discount is still what it was. It's not narrowed down. And coming Diwali now, definitely there will be further discounts. And it's not discounts per se in terms of rupee numbers. The discount could be in terms of better exchange offers. The discount could be in terms of better EMI offers. So overall, it's going to be a very good package for the consumers.
Okay, got that. Mr. Rajagopalan, I wanted your thoughts on the premiumization trend as well, because, since a year now, people are talking about this K-shaped recovery, right? Where on one hand, there is hardly any recovery in the rural market, but on the other hand, premium products are just flying off the shelves, whether it's ACs, refrigerators, even phones for that matter, right? The view is that the pre-bookings for the new Apple iPhone have also picked up substantially. Your thoughts on whether this is a trend that will sustain, and if you can just throw more color on this, which are the segments that are doing well in the premium space?
Yeah, I think the impact of COVID has definitely made people who can afford wanting to spend and enjoy what they can. And that is continuing, and I do hope that this continues, because at the end of the day, people who've got the money should spend the money. to get the economy moving. So that premiumization is definitely happening. What we would like is for people in the bottom of the pyramid also to be able to feel that they can spend. I think that sense of cheer is what is going to get the country to the next level of growth. And we'll wait for that to happen. And there, the problem is slightly different. The problem has been that on the one hand, the inflation was kind of quite high at 10% also last year, was quite high for everybody at that level. And they did not know whether their incomes are going to go up to that extent. Their incomes normally start going up by April, May, June, and now during the time when the festival season starts. So I guess at the point of time when the people at the bottom of the pyramid can also catch up to their normal standard of living, and they are also able to spend a little bit on non-discretionary, life will get better. So we would want people to definitely be able to afford their discretionaries. I mean, non-discretionary, but they should be able to spend for their discretionary also. That's when economy will grow. So we will wait for
that is of course what the future may look like, right? I want to understand what's happening currently. What is the trend? Nilesh, over to you. Any numbers that you can share with us on premiumization compared to say what it was about 6 months ago? Has there been a pickup there?
So basically, I think post-COVID, there's always been premiumization in our industry. Even month on month, quarter on quarter, we see people who are coming in. So there's two levels of premiumization which is happening. One is either they are going for a larger size. If they're buying a television, they do not want to buy a smaller one. They would want to buy the next big size, which their pocket can afford. And so is the case with refrigerators and washing machines. And in air conditioners, if you see, people are wanting to buy instead of a 2 or 3-star, 5-star machines. So premiumization is there. And that's why we are seeing a little less on the number growth, but more on the value growth. And it is here to stay. One thing which people realized in COVID was, okay, maybe we buy little less, but we buy the best. And that's what's leading to premiumization.
Even without customer choices, most products have become premium in the sense they become expensive because, I mean, think about it. BLDC fans, we talk about, right? Inverter washing machines, inverter air conditioners. I mean, actually, compared to 2-3 years back,
televisions.
Product pricing has actually increased quite substantially, 20-25%, just because of the change in technology. Maybe it saves power, etc. It's better, but the ticket size has gone up as well quite a bit. Gentlemen, thanks very much for joining us. Great speaking with you, Nilesh. Thank you as always, and Mr. Rajagopalan, great speaking with you as well. That's, by the way, the listing, the newest kid in the block, which is Jupiter Lifeline Hospital making its debut, and I think it's a super one. We're listing at a premium as compared to, big premium as compared to the issue price, 35% on top of what they sold the IPO at. So stocks in 4 digits now, 1,000 rupees just there. So that's very, very strong. The demand and the interest in the hospital space, of course, has been absolutely steady and rock solid, and that kind of showing up in this particular listing as well.
I think the street also appreciates high growth, high margin businesses, right? So this is a company which is just that. I mean, if you look at the revenue growth in the last couple of years, it's been in excess of 20-25%. It's a high margin business as well, almost 24% margins as of the year gone by. So even, I mean, profit making as well. So, you know, all of that, it's got multi-speciality hospitals, which is...
the big hospital is in Thane, right?
Thane, yes. Yeah. Niche spaces. I mean, Ekta was telling us, you know, that these are spaces which don't have too many hospitals in the surrounding area. So I guess that helps them as well. So, of course, very, very strong listing there, almost 40% higher now. Premium listed at a premium of 32% and picking up pace over there. Strong business. I think the only negative, if you want to call it that, is that it has a high dependency on the Thane hospital, which is about 54% of its sales. So there is that bit of dependency there. But apart from that, it is a very, very strong business that the company has. Also, post the IPO, the company will become debt-free. So that's another plus point over there. But Mitesh Thakkar is joining in now to tell us how he's approaching the market, which, by the way, is not doing anything at all. It's absolutely flat. Mitesh, how are you feeling? Which way is the wind blowing now for the rest of the day?
I think on the index is very difficult to guess, Surya, because I have a strong feeling that maybe another a day or two might be spent sideways, but the directional bias is on the upside. So you wait for any kind of declines to buy into. In fact, we did get one dip early in the morning, and the Nifty, you know, my preferred buying zone is closer to about 20,070, and we got a low of around 20,120. But in case you get to about 20,070, I would buy with a stop below 20,000 and a target of around 20,250, 300 is what I'm looking at. Or in case the bank nifty starts getting past Friday's high, which is 46,200 to 50 zones, then I think I would be interested to buy. So waiting it out on the index, but on stock side, I have one buy and one sell call. Syngene looks corrective and some profit booking decline can happen over here. So sell with a stop at about 830. Look for targets of 780. And City Union Bank, that's on the buying side. I would recommend buying here with a stop below 132 for targets of 140.
Okay, thanks a lot for that. Let us take a short break, but not without the piece of information that the PSU banks are on fire. A lot of them actually fresh 52-week highs, IOB, UCO, Central, PNB, Bank of Maharashtra, all at fresh 52-week highs. So when we come back, we'll talk more about that. And we will also get talking about the commodity space with our commodities editor, Manisha Gupta. Stay with us. Welcome back to Bazaar Morning Call. Let's shift focus quickly to the commodity space now and get you that one commodity that you need to be watching this morning. Manisha Gupta is joining in to tell us more about that. Manisha.
Thank you for that. Well, I'm looking at the crude oil prices where we have seen prices continue to hold on. We are still trading above $90 a barrel, and a 10-month highs is what we have seen for the Brent, and the NYMEX continue to hold up. So we have seen prices gain up by 30% now in last 3 months when it comes to the crude oil prices. And this is going to be the best quarterly gain as well when you compare it to the first quarter of 2022. So we are looking at strong gains onto this one. The support clearly comes in from the OPEC cuts that we are looking at now to the tune of 2 million barrels per day by the end end of December 2023. The China data has been on the stronger side. China imports have been strong and refining numbers within China have gained up as well. Add to that the stimulus measures that we've seen come in from the country and the resilient US data all have done its trick and support the prices. What the street will watch out for is the key central bank meetings into this week. You have the US Federal Reserve, where the markets believe that they wouldn't touch interest rates. Bank of England is expected to hike interest rates by 25 basis points. But as far as Bank of Japan and the Bank of China, which also have central bank meetings this week, are expected not to do anything with the rates there. The street also is looking at a fourth quarter deficit now, and we have seen OPEC, IEA, EIA, all of them talk about a deficit anywhere between 1.8 million to 2.5 million barrels per day in the fourth quarter of this year. It's a similar statement also coming in from ANZ now, which also says that while the fourth quarter will see deficit in the international markets for crude, and that would mean that while the crude prices will stay supported not just this year, but can see a spike going further in 2024 also.
Okay, Manisha, thanks a lot for that. Let's zip into a quick break. On the other side, our special segment, It's the Economy. Lata will catch up with B. Prasanna of ICICI Bank to discuss RBI's big changes regarding bond investments and the impact of this decision on the banking sector. Stay tuned.